Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Pachardez, and joining me is Senior Investment Analyst Rafi Boyadjian. We'll be reviewing the week ahead. So Rafi, we're still dealing with many uncertainties after the U.S. election. Trump has stepped up his legal fight to overturn Joe Biden's projected win, and the virus crisis is leading some U.S. states to head towards new lockdowns. That said, we should see economic data moving to the forefront next week. Let's begin with Australia, where the RBA expanded its quantitative easing program at its November meeting. What should we expect from the minutes coming up on Tuesday?
Well, Maria, the RBA actually did quite a lot in November. They slashed rates to near zero and they beefed up their quantitative easing program. So they appear to be pretty much done for the time being, at least. So the minutes are not likely to reveal that much, though we might get some hints of whether or not they're more likely to ease again or more likely to stand pat for the foreseeable future. We will also be getting significant data. We're going to get employment numbers as well as the preliminary retail sales figures as well for October. We should that should tell us how well the recovery is going as Australia emerges from its second lockdown. On the whole, though, given that the RBA isn't likely to act again in the near future, the main driver for the Aussie will be a global risk appetite. Of course, we had that vaccine news which boosted risk sentiment globally, but then we had, of course, sudden deterioration in the near-term outlook because of the worsening virus situation. So the Aussie will be mainly driven by those factors, but there's also going to be some Chinese data as well, which might also affect risk sentiment because, of course, China appears to be the only bright spot in the global economic recovery. And so if we do see further signs of strength in the Chinese recovery, that might provide a bit of a boost to the Australian dollar next week.
Okay, now in Japan, we'll get a slew of data next week, beginning with third quarter GDP on Monday. Are we expecting to see a rebound, and what will this mean for the yen?
So we should see a solid rebound for the third quarter, but that won't go anywhere near far enough in terms of recouping the lost output from the second quarter. And that's given the fact that the contraction in the Japanese economy was much milder than in other advanced economies, because although the second quarter contraction wasn't that big, it had actually already been in technical recession prior to the pandemic. And given that Japan's economy is hugely dependent on global trade, which although we did see a strong rebound in exports in the third quarter, it still didn't go far enough in terms of helping Japanese manufacturers to reach pre-pandemic levels. So all of that is likely to keep the Bank of Japan on edge for quite some time yet. The Bank of Japan doesn't really have that many options in terms of what else it can do, and that's why it's keeping an even closer eye on the exchange rate. We did see both the Bank of Japan and the government officials getting nervous when dollar yen started falling towards 100. So that's a key level to watch. Dollar yen has now rebounded a little bit. We had, of course, on that positive vaccine news. But if we do see further slide in dollar yen, then the exchange rate might become a more important tool for policymakers in Japan.
Moving over to the UK now, we'll get October CPI out on Wednesday and retail sales on Friday. Is any of this data likely to be a mover for sterling? And what about ongoing Brexit turbulence?
Well, of course, there's always Brexit lurking in the background, and given that they missed the October deadline, we're now looking at and now they're on track to miss the mid-November deadline as well. It looks like we're going to have at least another week of negotiations taking place, and next week we do have that EU summit on November the 19th, but negotiations may still continue beyond that. The important thing will be to watch out whether or not UK and EU negotiators will be able to reach some kind of a framework to which a Brexit deal will be, a trade deal will be based on. So if we do get some kind of a frame outline of a deal by the EU summit, and then after that we might see some further negotiations to fill in the details, if you like. But if there's no agreement at all whatsoever in the upcoming week, then it means we're probably going to be looking at December, some point in December, as the next possible deadline. All of that, of course, should lead to further volatility for the pound, and we're likely to see not a huge reaction from the incoming data. Retail sales, though, will be the main important one next week. There's also inflation, but given that we just had those GDP numbers out of the UK in the past week, it confirmed that UK economy the recovery had started to lose pace in September. So if we do get a poor reading for October retail sales, then that's not going to bode well for the fourth quarter, and so it really is looking like a bumpy ride for sterling.
And finally, in the US, other than the ongoing virus surge, what are the other upside risks for the greenback? And what can we expect from next week's data releases, including retail sales on Tuesday?
So we'll also be getting retail sales numbers out of the US next week. Now, like in the UK, consumption does make up a big portion of the economy in the US. So any worrying developments on the retail sales front would send some warning signals about the US recovery. So far, the US recovery has maintained sufficient momentum, but in recent days, we've had the daily number of virus infections in the US reach record levels. Several states have already announced tighter restrictions, and if we do see a further tightening of restrictions, and even perhaps some states announcing a lockdown, then that would lead to a sharp downward revision to fourth quarter GDP for the US, and all of that would in fact be positive for the US dollar, because if we see a sudden deterioration in the economic outlook in the US, we know that the dollar tends to gain on the back of risk off flows in the markets, unless of course it's only slightly negative data on the whole, then that's more likely to weigh on the dollar if it doesn't hugely impact the virus outlook. But really, the dollar will be mainly driven by the virus picture in the US. The dollar did fall back on the back of the vaccine news, but that was so far only proved to be a short-term thing, and the more immediate concern is how the US and Europe will ride out the virus storm in the winter months. Now, another factor that could boost the dollar next week is the ongoing election uncertainty. Trump's team is now focusing on 6 battleground states where they're hoping to either order a recount or have the elections or delay the election results in those states from being certified. He's unlikely to achieve much there, but you never know. If anything does happen on that front, that would be another factor boosting the US dollar. But if we do see, though, all of these concerns subside of the past week, then that should help the dollar also fall back. But really, the main risks for the dollar so far appear to be on the upside for the next few days.
Rafi, thanks so much. And thanks for joining us at XM.com.